welcome everybody. Happy Tuesday already. What a day, man. Woo, how much work can one get done in a day? Well, I think I just broke a record. Well, welcome to the Closing Beat. This is our stock market update where we go over the good, the bad, and the ugly of the stock market. You got lots of stuff flashing around on the screens. We'll go over all of that as well. One of the things that we're going to cover, we're also going to do very in detail this Thursday night for our customers. We're doing we'll send out an email on Thursday. But if you look at the events on our website, you'll be able to see the actual events that we have. The one that we're going to do Thursday, we're going to change it up a little bit. We've got a ton of new allocations coming to Jazz Wealth. So all of our customers, if you look in your account, you're going to start seeing changes. Now, this is not a sales pitch. This applies to everybody that's watching this. The markets have done really well, right? For the last 9 years, they've done really well. Now, I want you to picture a juggler that's got plates on sticks, and he's spinning the plates, right? And so for the last 9 years, those plates pretty much spun perfectly. The juggler just sat back and watched them spin, and the crowd oohed and awed, right? And now those plates are starting to get a little bit wobbly. I'm not saying the markets are going to crash. I'm saying the plates are getting wobbly. So the juggler has to go and spin the plates a little bit. And you see that in terms of investors, where investors are going over to healthcare stocks and they're playing over there for a while. They're coming over to energy stocks. They're playing over here for a while. The investors are running back and forth. So picture a juggler spinning the plates going like this, and now he's having to actually work, whereas the last couple years he hasn't. So what's the answer to that, by the way? Every one of you are going to say, well, if you think the markets are getting towards the top, then it must mean that you go to cash or you move some to cash. That is the worst possible thing you can do. We have every study, every class we've done for our customers shows that you miss out. You get ripped off. You don't move to cash. What you do, you look at your portfolio and listen carefully. If you have an investment, you're not at Jazz Wealth, go look at your portfolio. Hopefully you'll keep us in mind, but if not, just go look at your portfolio. Your portfolio is moving with the market at some pace, hopefully better than the market if that suits you, hopefully in line with whatever your risk tolerance is. Now, you have this portfolio. If you think the markets are going to get a little wobbly, and they're showing it, it's not my opinion, they're showing it, we're going to go over it today, then you take what you have and you go wide. You don't go to cash, you go wide. If you have so many different investments, you multiply it, right? Go wide, but keep everything moving at the same speed. Just go a lot further. I'm talking about small cap, mid cap, large cap, international, income, bonds, you name it, whatever fits your goal to get you still moving at the same speed, but now much wider. Think about what happens there. Picture the juggler again. If you were participating in one of those plates that were spinning, that did you well for 9 years. Now it's time to go participate in all of those plates. So that way, as people start going, uh-oh, this plate's a little weak, let's go over here, let's go over here, let's go over here, you can sit back and go, I'm already there. I don't have to move. I'm participating. Now, the key to that is speed. Thursday, we're going to do a class for our customers to talk about that. It's like I said, it's sort of a last-minute thing. But take a look. If you're one of our customers, we're already starting to switch you out. One customer already emailed and he goes, 313 different positions. Remember, we don't pay any commissions. Our customers have no fees. When we make that adjustment to go wide versus stay tight, you don't pay anything. So anyways, keep that in mind. Please look at your portfolios. Anyways, that's it for that one. Up at the top, you've got what the markets did today, global markets and bonds. Off here to the left, you can see the Dow was lower. Really not that big of a deal. We told you this yesterday, that traders will take the afternoon off. And if you look at this chart over here to the corner, you can see the second half of the day just blipped around, nothing happened. Why did they take the second half of today off and will take the first half of tomorrow off? Is because the Federal Reserve's announcing they're going to raise rates tomorrow. We all think they're going to say that. They're basically going to do it. They've told us they're going to do it, but nothing's official yet. The key to tomorrow's meeting won't be the rate hike. It really won't make much of a difference. We all know it's coming. The key will be what do they say going forward? Are we going to do this again in December? Are they going to take a quarter off? What's the sort of commentary? Or there's a fancy word they use on TV. I can't think of it. But so expect quieter markets. The Dow was only down a quarter of a percent. S&P 500 only lost 3 points. Not really a big deal at all. If you have any tech weighting in your portfolio, it probably made up the difference between what happened in the Dow and the S&P because the Nasdaq gained 14. Let's go over to the charts and take a look. Did it work? Hey, it all worked today. Okay, good. Here's the Dow. You fully expect to see a little pullback there. Nobody cares. Statistically, it is supposed to happen, and it's totally expected. It's still a beautiful uptrending stock market. I have no negative complaints about the market, and fundamentally, stocks are obviously on fire. It's just, again, there are places where money's just not doing well, so we want to recognize that. S&P, you can see, pulled back just a little bit. What I want to focus on today, sector-wise, you got semiconductors. Intel was downgraded by Raymond James. Hey, let's check Raymond James, by the way. Raymond James was that breakout play. Awesome, look. So same exact thing that we talked about on Raymond James. That's not really the focus right now. I'll try to stay on track. You got the semiconductors down 1.5% today. That's Intel. Raymond James downgraded Intel because of their chip manufacturing issues. And it was not really new news that happened, but it was starting to pull down those stocks. If you look at like Microchip, that was down 4% on the day. Micron Technologies lost 1%. AMD never loses anymore, but today it lost a fraction of a percent there, not a big deal. So chip makers, a little bit weak on the day, and remember, you need the chip makers, you need tech stocks to lift the S&P. We didn't have it today, so the S&P wasn't going to go anywhere. Add to that the banks lost 1/3%, and so those two just didn't help the markets in any way, and that's okay. Basically, they just took the day off. Okay, you might notice your utility stocks, your real estate stocks, your interest rate sensitive stocks still a little bit weak. Utilities lost 1.33% today. That's just because the rate's going up tomorrow. Most people know that. Traders have all anticipated that. And so if we even look at the price of your long-term and short-term bonds, here's long-term bonds, the actual futures market. Price is lower by 1/4%. They've been sliding, which means rates have been going up. You can actually see the rates up at the very top of the screen if you want to look. Short-term notes also sliding, prices sliding, meaning rates are going up. So utility stocks a little bit weak on the day. Real estate, we could look at any number of real estate things. Here's a sector ETF down just a touch, right to the 200-day moving average. They have slid over the past few days. It's like because all of a sudden we now have confidence in these rates going higher. Is ICF one of them still? Yeah. So that one down a little. Oh, that one actually finished flat on the day. So interest rate sensitive stuff, you get my drift. Transports, the uptrend breaking on transports. So a nice little tight uptrend going on there with transports. They've officially broke. We'll take a look through a few of the stocks. UPS just continuing to slide to the 200-day, and FedEx, remember, broke through the 200-day. That's a problem. Railroads hanging in there, right? Railroads basically hanging in there near highs, so a lot of those airline transports. Energy, that was a focus today. Oil prices a little higher. You have to ask yourself, is energy at a little bit of a short-term top here? Here's the XLE. This is an energy ETF. Whether you look at the energy one, energy-related companies, the explorers, whether you use the price of oil directly, you use the oil service stocks. You see, I went through all of those right there. They've all had a nice stretch over the last 2 weeks. I think it'd be okay if those pulled back and took a little bit of a break. That's sector-wise. Let's look at individual stocks. Oh, Henry can't wait, man. Henry's like, look at some Square, man. I got Square. I'm happy. I'm excited. That's an 11% gain on the day. You know what's sad about this? So what you're looking at there on the screen or on the whiteboard here, FANGs. They're trying to add Square. An analyst came out, actually put a $125 price target on the stock, and he said, look, it should be Facebook, Apple, Amazon, Netflix, Google, and Square. He thinks they should be added to the mix. Well, what was kind of sad about that is the news kind of overshadowed the company's announcement of they've got a new payroll service app that they put out there. And I think that's going to be a great little app if you take a look at what they're doing. So, hey, I don't know. Are we going to start calling it FANGs? We'll see. It seems like one analyst is able to make that happen. So, of course, Square hitting new highs. If you're a short-term trader, that is what's called a profit-taking high. You take a little bit, right? If you've got 1,000 shares, or I don't know, whatever you have, you take a little bit off the table, you lock that money in, and it lets you sort of allow Square to breathe a little bit more. So, not telling you what to do with your money, but that was just brought back some old memories of when I was allowed to do those things. Okay, Dunkin' Brands. So the stock was higher by 1/3%. Don't call them Dunkin' Donuts anymore. They want to be called just Dunkin'. That's it. So yesterday, Weight Watchers, they now are called WW, which is the stupidest thing I've ever heard of in my life. My opinion doesn't matter to you guys, right? I just point out stuff. but WW is the name of the company. And they ask the person, like, well, what is it, just because you don't want to be called Weight Watchers? And they go, no, WW doesn't even mean Weight Watchers. And they go, what's it stand for? And it stands for WW. But I know, but what does the W and the W stand for? The lady's like, just WW. That's like the IHOB when they did that. IHOB, which by the way, that's symbol DIN if you follow IHOP or IHOB. Anyways, so Dunkin' Brands is now wanting to be called just Dunkin'. But what's interesting is if you go back and you look when companies do this rebranding, it actually is quite profitable and the company tends to do well. I saw a very brief little thing on Bloomberg. Was it Bloomberg? I think it was Bloomberg today about how that works for companies. So if you look at IHOB, which is symbol DIN, actually a decent little profitable boost from it, mainly because of the tweets and the attention that it got the company. I'll move on. Okay, Starbucks in the news today. The stock finished a little bit higher. The most important part about this is it's back above the 200-day moving average. Major changes here. The CEO put out a memo to everybody saying significant changes are coming, including possible job cuts and executive changes. They want to move faster. The CEO, the new CEO, says he's taking the reins. He wants to move a lot faster. And so things need to be done to boost sales and speed up the decision-making process. That's a guy that's got some energy. Just got the new gig. He's wanting to run the company. Look out below, or look out for him, not look out below. Pandora analyst came out today, basically said, hey, did you see how the stock price reacted from Sirius? The stock price fell a little too much. Yesterday, Sirius said they're going to go ahead and they're going to take over Pandora. They're going to swap stock and basically do an all-stock deal. And Sirius's stock fell a little too far too fast. Well, an analyst said, hey, because of that, that's an indication that the big institutional investors believe that this deal's just not going to happen or will happen at a higher price point. So it's just drama, right? It's just that will they, won't they sort of drama thing. Speaking of relationships, let's take a look at MTCH. You guys know what this one is? So these guys own like every dating app there is. Match.com and Tinder will be the focus of today. Tinder is this company. That's one of their brands, MTCH, Match Group. They're experimenting with their dating app Tinder, where they're going to let women have more opportunity to scrutinize men and potential suitors. I guess it doesn't have to be just men, but potential suitors before they communicate with them. What I thought was odd about this is they're testing it in India. Is Tinder popular in India? I guess so, as they've decided to test it there first. Shares are higher by 85% this year, and they gained 3.5% on the day. So you can't argue with what they're doing. People enjoy their apps, and so if it happens to be Tinder, that's one of them. That's crazy. So that's all I got for you, actually. I covered a lot there. I know I took a little bit longer. Remember, if you're one of our customers, the email will go out Thursday. We're going to talk about going wide. Right? The portfolios are changing. The speed, your goal, how it moves, nothing will change in that respect. We've done a lot of research to make sure that we can go wide and still give you what you expect. So that will be that. If you have any questions about that, you know where to find me. Otherwise, we'll be back tomorrow, hopefully with the live Doe show. We took today off, did a recorded video on limited brands. If you like stock analysis with a little fundamental kicker, check that out. And I appreciate you guys watching. We'll talk to you soon.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.